Alright guys, welcome back to my second video. Last time I presented you British American tobacco, kind of half semi-safe in my opinion for me. As always, not financial advice, only educational and for entertainment purposes. As I was saying last time, British American tobacco, this time we have a completely different company, Copart. Some of you maybe have not heard about Copart, even though Copart is actually a big part in many people's daily lives. Um, and Copart has 53 billion market cap, so it's actually quite a big company. Operating cash flow the last 5 years has been growing 14.39% per year CAGR average, and analysts predict about 20% growth going forward. Um, if we take a look at stock price, it has pretty much known one way, and that is up. Um, it has had a little bit of trouble here, a little bit here, 2000, and here around 2008, big recession, but at the end it kind of always recovered. It had some little dips, but especially since like 2016, it really took off. Had a few big dips, but after dip, it's just started up the rocket booster and kept going up. So um, the stock must have something to it looking at this kind of price action. The PE ratio is 39.81, which is kind of high PE ratio. And if you look at Nvidia's trading for like forward PE ratio of 30, right? This is the trailing PE ratio. The forward one is of course way lower because there's a lot of expected growth. Um, but I will tell you why this stock is priced at a premium. It has its reasons, and those reasons are very good. So, Copart is a junkyard company. This is one of their junkyards. You can see very tidy. All these cars line up here. Some of them look kind of fine. Some of them they're really broke. But that's what a junkyard is about. Um, and that's kind of how they make their money. Here's another picture of a junkyard of theirs. Um, so now we know Copart owns and operates a lot of junkyards, like this one and this one. But how exactly do they make money? Why do they have a 39 PE ratio, and why are they worth those 50 something billion? Well, where did the junkyard cars come from? Well, come from something like this. So these poor guys have had an accident. Fortunately, they're fine, but their truck got split in half this year. Well, what do you do? Well, this guy is probably looking at his phone, looking at his car, but eventually he has to call the police. So there'll be a report on the accident, like, hey, this guy's truck got split in half, and hopefully, well, these guys are not hurt, so they don't go to the hospital. So that part is not included here. But let's say this guy insured his car, right? So eventually, his insurance gets to know, right? Here's the insurance agent. He's of course upset. You can see it him. You can see he's not very happy about car being totaled. And now the insurance has, well, two options. Either they repair the car for you and you get it back, but in this case, I don't know if a repair is very economically viable. So they'll probably go for the second option, which is they sell the wreck of the car, goes to the junkyard, that exactly like how exactly that works later on. Um, so they sell the wreck and give you some money. They pay you a certain type of compensation depending on what insurance policy you have. In countries that can vary, and for example, if your cars have different type of packages, like you can even get more than what your car is worth, but that Copart doesn't really care about that. Anyways, the insurance company doesn't really know how much this wreck is worth. Like, how much is this half a car worth? This guy never really touched an engine or anything in his life. He just drives to work, has this insurance 9 to 5. So the insurance need to hire somebody to assume the value of the wrecked car. So that's where Copart comes in. So here's these guys. These are Copart employees, and they're valuing. Uh, Actually, it's a burnt car, and it's a new service Copart offers. So Copart has, for example, software which their employees use to value the uh, wreck or salvage car in general. So, for example, if it's a car which burned, it's like those like that really messed up truck that's split in half. Or if, for example, it's a flooded car, their software and their people are specialized to value like how much value has left, and then they tell the insurance like, hey, the car is worth enough to be repaired, but in this case, as you can see in this picture, there's nothing to repair. So they just tell the insurance like, hey, you can get this and this much based on our software, and then it probably should just pay off your client. That's what Copart does. One of the things Copart does. So they have also in general damage assessment, but also fire damage assessment, flood damage assessment, and they do all these services for the insurance. 80% of their clients are insurances, and the rest 20% they're financial institutions, usually like banks or different type of insurance policy providers. So the damage has been assessed. The car is still somewhere. Probably has been impounded by the police, right? So no, some lot. Then Copart comes, pays different fees. You know, when your car gets impounded, if you park wrong, you have to go there, pick up your car, pay some fees, and pick it up. Copart does this. You can see here, big GMC truck, or what is it? No, Ram truck. I'm sorry, it's a Ram truck. Um, Pick it up on a trailer. Here's some wrecked cars, and they drive them to the junkyard, which I showed in the beginning. Here, for example, is a little Mercedes Q Copart van in Germany. They operate in 11 different countries, and one of them is actually Germany, UK, and also in the Middle East, they have a few different countries in which they operate in. All right. Um, so now the car has been picked up. It's on the junkyard. So shown in the beginning, right? Somewhere between these cars. Somewhere here in between. And Copart now has to extract the, let's say, assumed value, which they report to the insurance out of the car. This is actually where their second, let's say, cash comes from. So first of all, the insurance pay Copart for value assuming services after an accident or any kind of insurance claim by the client. Um, Either they buy the broken car, scrap the car for parts, and sell the parts. Um, and then like try to recycle the rest of the car and try to sell off the metal value. In general, they just try to extract as much value as possible, and whatever they extract for themselves, the rest they like handle it out with the insurance. And there's another option, which is like their main money making machine, which is auction the car on their action platform. So this is what bidding on Copart looks like. Here they have all the information about the car. They like estimated retail value, so what the car could sell for, the primary type of damage, if there's any secondary damage, what fuel it uses, rear wheel drive, front wheel drive, engine information, and it's some different type of information, the VIN number. Interested if it's a stolen car, also, Copart also sells those for insurances. Here you can see 2019 Dodge Challenger. It has a lot number that you can find out on which lot it is here. It says everything's very, let's say, in good tidy shape. You know exactly where the auction is, which lane the car is. So I showed you the junkyard before. There's so many cars. The Copart workers can find it very easily. And here you can place your bids. You can see these are different users. One user from Minnesota, one from Georgia. They're betting against each other. Right now, the Minnesota uses the higher bid, and this is like a counter running up. You can also place a max bid, and the bids will just keep going up until the highest bid will eventually show up. For example, this guy can even place 15K all at once, and then will eventually go up to 15K. But maybe Minnesota is even ready to pay 20. Um, so yeah, that's how they make their money. But they get fees on their auction platform, and they get data by selling these cars. So they know, okay, this type of Challenger, let's say it's sold for, I don't know, 19K. They know in the future when the insurance call them and there's another 2019 Dodge Challenger who had an accident and they need to do a value assumption on it, they have input their data in their software, and then they can do more predictable and more, let's say, safe assumptions for the insurance. And also that's pretty much good for everyone if Copart gets more and more data and they can have a safer value assumption for the to be auctioned off cars. For also like Google or any type of company which handles a lot of data. And if the car eventually gets auctioned off, goes to a buyer, it probably will end up like this video here I found. Copart BMW build. There's a lot of YouTubers doing these car builds. They're actually very entertaining. I recommend watching them. What is kind of important for Copart? This is a study by UNEP, and it shows the different repair laws and also, well, not the repair laws, the vehicle import restrictions in general. And the red ones, they're good for Copart. The green ones are bad for Copart. The green ones mean these countries, they have very strict restrictions on importing cars. Like the cars are not allowed to be too old, for example, or have certain type of emission standards like Euro 5, Euro 6. So these ones pretty much, and some countries in Africa, middle of Africa, direction south, like they don't have any restrictions or barely any. While Russia, Ukraine, also some countries in the Middle East, they do actually have some restrictions on imported cars. So that limits the ability of um, Copart buyers, take like the people who take part in the auction, that limits their ability to import cars because um, Copart has a lot of international buyers because of repair laws. For example, if somebody in America has an accident, if it's a certain type of accident in America, you might not be actually legally able to repair the car. While, for example, in Mexico, or let's say somewhere here in the Middle East, it might actually be legal to repair that type of damage. So that's where also Copart is a part of money. Copart will transport or make sure that the car arrives safely to Mexico or somewhere in the Middle East, and then those guys they repair it and sell it, and that's how Copart gets money from them on fees from the auction, on fees for transport service, and also the buyer benefits from reselling the car after it has been repaired. So this is what the membership for the auction platform of Copart looks like. You have basic and a premier membership. They have different fees. Like this one's quite cheap, $60. This one $200. The main difference is that this one you have to have deposit of at least, how is it, 10%. Yeah, any bit over $1,200 requires a 10% deposit. So that means if you're a repair shop, you have to deposit money onto Copart if you want to partake in those auctions. Or you say like, no, I don't want to transfer money all the time. I have my money laying around Copart, like I need mine for parts. Then you just pay this premier and then fee, $200, and then you have no kind of like no deposit at all, and also you have way better customer support, service and support, priority support on phone chat, also in location. Like you can go to the junkyard and talk to the people there. So usually many shops, especially the professional people, if they're not like very short on cash, they just do this, especially if you have high volume, like bidding on multiple vehicles at the time. If they're really doing this professionally, they will usually opt for the Premier. So this is the magic of Copart. Copart seems like a junkyard, but actually it's more of a software company in my eyes. That's why also it has those high 39 PE ratio. You think a junkyard would be rated at like a 10, 15 PE, but actually that's where they're making the money from on this software, this auction software. In the next, um, my next slide, you can see the different fees you'll have to pay. And of course, um, you have the membership fees and also you have after purchase fees. So the lower the purchase price of the wrecked car is, the higher the proportional fees. You can see it's like around, what is this, up to $4,000. The fees can range from 68 to 60%, but the higher the purchase price of the car gets, the lower the amount of fees. Above 15K, it averages around under 10%. It's the same when you buy a stock on the stock exchange, you pay like a certain amount of fixed fees. If you only buy $500 worth of the stock and the fees are 50, then $50, then it's 10% fees. But if you buy 50,000 worth, then the fees, then they will be a lot lower. They'll be 1%. It's like, that's a certain amount. The fees are fixed, but the higher the number gets, the lower the percentage are of the fees. So um, most of the cars sold in Copart, they're probably around this range here. Not many that around there, because then the fees will pretty much eat up the purchase price. All right. Looking at the market share, kind of see this like, okay, Copart 50% looks like a monopoly, and there's only one other company, which is IAA, got purchased by Ritchie Bros in March 2023. And they share a duopoly pretty much in this market, which also makes it very attractive. That's also why Copart has a 39 PE, because there's barely any competition. Ritchie Bros' main business, it's construction assets. They auction off construction assets like excavators. Also, they sell some software for equipment management for building companies or builders and auto dealers. And Copart is like the number one. It it has half of the market, and other competitions 20%, like smaller, it's like five or six private auction websites. One of them is Mannheim, which is privately owned. So Copart doesn't really have that much competition, but you wonder like, so Copart, they're growing to cash flows that fast. Why don't they have any competition? How have they managed this? They've been around for a while, but they kind of took all over the market. Well, Copart has a big advantage. All this, the inflation rates in the 70s, 80s, before the recession, and now they don't care about that because Copart is immune to inflation. There's one very important factor when operating a junkyard. Well, the junkyard is a lot of land. You need a lot of land to operate a junkyard, to put your cars on, to have them stored before auction. Then maybe you want to transport them to another lot before you transport them to somewhere overseas, as I said before. Well, you have to get this land. You either lease it, like IAA is doing. Well, this is the balance sheet of Ritchie Bros. But as you can see, this was before the purchase of IAA. In 2022, they had about 172 million of capital and operating lease obligations. And now 2023, after the purchase, they have 1.6 billion, so almost 10 times the amount of capital and operating lease obligations. Because all they had before was a little bit of construction auctioning, construction equipment auctioning, and also selling software. And now they have IAA, which auction cars, and they need those junkyards. And they had all of them on a lease. They didn't have that many of them on their bought with cash. That's why the leases went up. But the problem is most of the leases, or a lot of leases, are inflation linked. So when inflation goes up, like it happened, they will suffer. But the thing is with Copart, because Copart was for very long founder led, and they didn't need asset light model to satisfy Wall Street and to have very high ROEs on the short term. They took the long term route and they did this. They have almost no leases, 88 million compared to IAA. So that means they're immune to inflation, they're immune to rent increases, to better, like worse lease terms. They don't have to negotiate every few years another lease. So they're not capital light. They have some assets they have to carry around, but over the long term, this has been a very, very strong play. Not only because of the leases, because they're immune to price increases, but also because the game, the thesis has kind of played out already. There is not really a lot more land to have for junkyards. It's very hard because it's either leased out or it's bought by Copart or by any other smaller players. Why do I say it's very hard to enter this market? Even if you had the money to enter the market, this is City of Orlando. You can look here. I just did a quick Google Map search. Copart is on the outskirts. You wonder why is it not Oscar? Wouldn't it make more sense like place Copart right here and near the science center in the city center where the people have most crashes, then Copart will have to transport the car like just a few miles away. Well, um, nobody wants a junkyard in their backyard because it's a junkyard in your backyard. You don't want that. You don't want the excavators, not the excavators, the pickup trucks and all that trash around you. So you have to place it outside. So it's very hard actually to find land for a junkyard. And but as you can see, people don't mind when they have Burger King or also McDonald's. You can find many McDonald's. They don't really care if it's in their backyard. And yeah, exactly. That's what I'm talking about. Who wants this in their backyard, right? Because some of the cars, most of them, they get tidied up and get auctioned off, but some of them also this happens to them. Nobody wants that. Now to more factors, let's say. Now you kind of know how they make money, how their what their main assets are, what are some advantages over competitors. Copart, to run their auction, need cars. They need broken cars. This is kind of how the car cycle is in America. So 14 million units, new vehicles enter the market each year, and to the additional 285 million vehicles in operation, and each year 12 million are removed, so plus net 2 million cars each year. This is from 2021, the IAA investor presentation. And of those 12 million, 7 of them, they're gone. They can be brought by insurance, they were uninsured, or they're just broken and they out of service. You can't drive them anymore because they're so old. But of those 12 million, 5 of them go to auction, to the salvage auction, like Copart and also like IAA does. So also have the same kind of auction model. So 5 million cars get auctioned off per year. Um, what influences the amount of cars going to auction? So the supply in cars. We have to look at the supply side of things, like we would do with the commodity stock, like Rio Tinto BHP. We need to know, will the supply keep coming? Well, one of the factors of the supply is the vehicle miles. So how much are the cars driven? Because the older they are, the more they drive, the more likely is that they go broke or they'll have an accident because some kind of system stops running or the cars don't run, so there's an insurance claim, right? As you can see, the vehicle miles driven have constantly increased, especially for the light duty vehicles, so the normal passenger vehicles. They've been steadily increasing since the 1960s. People have been driving their cars for longer and for more distances, so the miles increase. So that's one tick, let's say, on the checkbox. Um, if you look at age, average age of vehicles, doesn't really matter which kind of vehicle. It's either cars, light trucks, so in general combined. Everything is going up. So the cars are getting older and older each year. Um, I think one of the factors is due to prices. So cars are getting way more expensive. People wages aren't increasing the same as the general inflation of car prices, and also there's higher interest rates. So people are keeping their cars for longer, they're getting older, and they're driving them for longer. So they're more likely to break, and that means more supply for Copart. Now, of course, those cars, as they get older, they drive more. But unfortunately for Copart, it's kind of immoral part of it is they have to crash for them or break down for them to be able to like auction them off. Due to technological advancements like driver assistance systems, lane assistant, any kind of systems to keep the driver awake, the crash rate has steadily been going down. Seatbelt also here keep going down. But what happened around here this year, so when it goes back up, well, smartphones. Everybody started getting smartphone around 211 to 12. About 60 to 70% of Americans have smartphones. And people started using them while driving, talking, texting. And so the crash rate has actually increased. So the smartphone has actually been kind of a booster to Copart's business model because the insurances all of a sudden have more car crashes, needed more services from Copart, like value assessment, picking them up from the impound lot, also paying those fees up front. They eventually get the fees back, but they have to pick them up from the impound lot, drive them to the junkyard, auction them off, so on and so forth. But as we see, the number of this is good news. The number of fatal crashes has still gone down, even though the number of crashes in total has gone up. The fatality of crashes has gone down because I believe due to the assistive system. So even if the people have a crash, they're less likely to die because the crashes are not as severe. Because you have, for example, brake assisting systems or different detection systems which detect pedestrians, other cars, and so on, and brake for you even though you're not paying attention. Another factor for Copart requiring the services, another factor for insurances requiring Copart services more is also the increased repair costs. Oh, sorry, I'm a bit ill. Um, so 77% of the cost of a vehicle used to be mechanical cost, right? In the 2000s. The electronic and the software made something around 20%, right? 23%. And as the years gone by, the mechanical parts barely make a part of the cost. Also, due to consolidation of the big automakers like Volkswagen own all these brands, GM, Stellantis, they're all owning a few brands, right? So they share the parts. The mechanical parts costs have gone down. But what has gone up to 60% of the whole vehicle is the electronics and the software. And this is easy to repair. Back here, you could repair the costs. You could repair the car very easily because the cost was low. You can place in a few parts. The electronic and the software wasn't that much. Usually doesn't get broken that easily in the car crash back then because most of the car consists of mechanical parts. But now it's not the case anymore. If there's a crash, all the sensors are broke, maybe some screens are broke, some kind of data drive is broke, some kind of chips. The car is like it's very hard to repair. So it might be more valuable for people in a country where labor costs are way cheaper to buy the car off the auction system, let Copart export the car to them, and then because they can repair the car for a much smaller cost than in the country like in a country like USA or Great Britain where the car crash happened, they can repair it very cheaply and sell it on for a certain margin. Depends how cheap they can repair it. Here you can also see the kind of data that is strengthening my previous claims. The total loss percentage of total claims. So that means how many cars after an accident are reported as a total loss. That meaning that you can't, it's not valuable for the insurance to send it to a repair shop. So that has gone up to 20.6%. It has gone down during the pandemic because people were driving less, there were less cars on the road, so not as many cars were totaled after an accident. So that's why that has gone down. But in general, it's going up and up. The more electronics there are in the car, the more it's going up. But it's probably not going to go that much further up. Depends how much more electronics and software is going to be in the car. The more likely it is that the repair is not worth it. So running a DCF with analyst expectations, having the same multiples for the free cash flow, I actually use the normalized free cash flow without growth capex because the growth capex is, for me, it's still cash flow invested that will be in the future, depending if it's a high return on capital company, then the future will be available to reward the shareholder. That's why it's very important. I always try to look at the cash flow. That's the only part of a business that can be used in the future sustainably to reward the shareholder. You always need to focus on the cash flow. Even though the price to free cash flow is high, if we keep the same multiple, if Copart can keep growing at 20% the next 5 years, at 80% the next 10 years, with the discount rate of 10%, I can expect 6.2% return per year. So it's all right-ish, but I would say there's not really a safety margin there. And Copart is still quite highly valued, but if there would be a dip, me personally, I will load up a lot on those shares. Little disclaimer, I do own a few Copart shares, but as always, not financial advice, just educational and for entertainment purposes. So, a bit overvalued, but you can see it's pretty much a huge, almost a monopoly, so understandable that it has such high valuation. So, as always, with every stock, there's a few risks. And for me, there are a few little risks, but as always, I look at the fundamental of a business. I don't like to calculate the small percentages or whatever. So we're only going to look at a very big risk, which actually could be a risk, which is self-driving cars. As I said, Copart needs accidents to happen. But if this self-driving car, and this is a self-driving car, and this is a self-driving car, and they're all connected to each other, some kind of data tower, and they all know each other routes, they're not going to have an accident. So that means Copart is not needed in this process. Well, I don't know how far self-driving off is. Maybe in 10 years, 15, 20, maybe in 5 years. That's in 5 years, not that good. But the thing is, there will be no self-driving cars on the road probably longer than that, longer than 5 years, longer than 10 years, longer than 15 years. So as long as there's people driving cars and all cars are connected to each other, there will probably still be car crashes. And even with self-driving, there might still be a few car crashes. You never know. Anyways, this is one of the few risks I see hindering Copart in the future. But in general, I don't see that many risks except the valuation. But let's say fundamental risk to their operations, except of course like a failed acquisition or a recession. But those type of risks most company have, anyways. But the management is still capable, so yeah, I won't be too worried on the other operational risks. So that was it about Copart. Hope you enjoy it. Very difficult business, not easy to explain. Needs a bit of time. We also have to look into it if you find it interesting. Not that easy, not an easy business model, but very interesting. Big Mo really like this business, and I'll definitely keep an eye on it and keep following it. Anyways, I hope you enjoy it, and see you next time.